Welcome to SimplerOptions.com. My name is Don Kaufman. Tonight, October 29th, 2015, we are going to take a little bit of a gander at none other than Apple. Ooh, why do I pick Apple? Because I guess the only way to place this quite eloquently is that Apple is up and I guess in my face, and I'm loving every minute of it. How can that possibly make sense over here when I say that? I've been short Apple. And short Apple in just the last 2 weeks of trade has not exactly been a happy place to live. And short Apple from, the 110 area all the way up to 120, that's $10 of pain I've taken. And yet, I'm all right with it. But to give you a little background on the trade, first and foremost, I've actually been short Apple since the 130 level. And it was actually back all the way in May when I had my initial short in Apple. So this is a trade that I'm going to talk about for just a moment that you can do in a number of different products over here. Okay, and you can use this methodology for a number of different products. This is kind of what I call, all right, an investment strategy, which is going to take a little bit longer term. And the idea of an investment is you are going to hold it for a period of time, but my investment is not passive because the idea of passive investing is a painful one to me. I'm kind of short in this investment, and I'm short and I'm in it for what I kind of call the long haul of being short. What that ultimately means is I'm short Apple, and I'm physically short the stock. Can't do it inside of an IRA. You can't do it in a 401k because they don't allow you to be short there. It's a regular taxable account, as painful as that may be for some of us. I'm short the stock, okay? And as the stock moves from, week to week, month to month, I sell premium against my short position. It's just the opposite of the covered call. And I do actually sell premium in a week-to-week basis because, lo and behold, even the weeklies in here, they pay off. I mean, if you look and you sell like a 30 delta option, you're between 85 and 90 cents for 8 days, I'm all right with that. Okay? Why? Because all I have to do is sell some premium for a period of like 5 weeks. And I'm collecting, okay, even after transaction costs and everything, I'm collecting like $4 of the dollars back. So when I say that I'm short and kind of loving it, well, yeah, I've been short since like the 130 level. And to be completely forthright with my position, I was short, I covered the position at 110, and then the premium picked up inside of Apple, and I shorted it again right at about 110. So I reopened the position. So I was short at 130, closed it at 110, reopened it, sold the stock again at 110. Now it's up big time in my face at the 120 level over here, and I'm still selling premium against it on a week-to-week basis, just like kind of what I would call an inverted covered call over here. And the reason I'm okay with being short and selling these puts against my short position, the puts pay a little bit better than the calls do. Okay? Why? Because they're skew. Out of the money puts trade for a premium over the out of the money calls. And in this kind of trade, I've had so many emails in the last couple of days like, Don, are you okay? I'm fine. I'll be fine if we go all the way back up to 130. And it's shocking because you go all the way back up to 130, you're going to break even. No, I'm not. I'm going to be ahead of the game. I've been selling puts against it week to week to week, collecting my 80 cents, collecting my 90 cents, and I'm going to just knock it out every single week. Got to remember, I've actually been short, okay, all the way back here. And I didn't actually hit the top over here. I got right at about the 130 level. I did not get it at 132, right at about the 130 level. Got short, sat with it. Okay, sold some premium. We jump. We sell some premium. So all I'm doing is using the stock as a vehicle to sell my puts against over there. And yes, there's an upcoming dividend, and being short stock, I'm going to have to pay the dividend. I'm all right. Breathe deeply. I'll be just fine, in doing that. So I like to call this being short, trying to finance my short with selling premium against it. Am I always right? Absolutely not. Okay, but in this particular case, I'm more than comfortable with the position. And if somebody says, what happens if the stock goes all the way up to 140? Well, I guess I'm going to have to sell a lot more premium. But again, short stock and comfortable. Another one you might want to consider here in the next few days, could Starbucks be forming near a top? start to think about it. Starbucks just came out with earnings after hours, faded a little bit off some of the highs, but Starbucks could be, again, kind of a candidate. Again, short and loving it. That's a style of trade. It's not just, I need to be short markets over here. Selling puts collects more premium than the out-of-the-money calls in most major products out there. Thanks a lot, everybody, for joining us here at simplerstocks.com. Bye-bye.